The 12th Consultative Forum created a unique platform for all the stakeholders from different countries to share their experiences and also to learn from each other the new techniques about how to introduce new products to reach the poor using new technologies.
The 12th Consultative Forum on InsurTech and Mobile Insurance was a suitable mix of very carefully picked up issues and areas which were very relevant to the Asian region. The examples of InsurTech applications from different countries were presented, which gave good food for thought. For example of usage of artificial intelligence for processing health insurance claims was presented, which is being done in India, and peer-to-peer insurance in China that was presented. The subject experts from different organizations such as Asian Development Bank and IEIS shared valuable insights about the evolving issues and also shared the probable coping strategies, which gave us further impetus to explore the areas of digital developments in the field of insurance.
I see four highlights so far. Personally, I'm concerned. One is it provided me a bird's eye view of the current state of play in South Asian jurisdictions. One of the key learnings was that the preconditions do not exist in the ecosystem still. The second learning was that the policy and regulatory perspectives on balancing risk and opportunity with respect to fintech or innovation. And what was interesting to learn from the regulators was that they are still very conservative even for the known unknowns. The third area was insights to gauge the extent to which digital technology has really penetrated the bottom of the pyramid. There are some pockets of success, but the journey has just commenced, so I would like to reserve my judgment on that. Finally, consumer protection and data privacy. It was discussed. We found that it was weak. With a large number of players, it would become impossible for the supervisor to enforce their writ for non-observance of rules and regulations.
Because the low penetration levels prevailing in many countries, it is evident that there is a broad gap between the people and the insurance providers. And also, many poor do not have equal access to insurance. Therefore, the new technologies or the InsurTech will be a very effective way to introduce new innovative business models and products, especially designed for the poor at a low cost and at affordable prices.
Cost efficiency is the key factor which makes technology relevant for the poor. Like we learned from the example of India, where artificial intelligence was being used for processing health insurance claims, which significantly reduced the costs. Likewise, in distribution also, technology reduces costs, which makes it feasible for insurer to distribute the small ticket size products. For example, in Pakistan, where insurance penetration is less than 1%, but tele density is more than 72%, so mobile phones can serve as a very important touch points.
The responsibility for managing risk is shifting from the state to the individual. In this context, individuals, households, communities, and businesses will have to understand their risk better. They have to understand their life cycles and devise mechanisms to avoid, retain, share, or transfer risk. Digital applications like big data, artificial intelligence, blockchain will assist in financial preparedness and identify segments in the life cycle of risk where insurance and reinsurance can provide the most optimal solution. What does this mean to the supervisors? Well, supervisors need to equip themselves to understand the fast-changing risk landscape. If not properly regulated, it can result in unintended consequences. Failure can create mistrust in the financial system, which has taken a lot of pain and efforts to build. Cybersecurity has systemic ramifications. financial sector regulators need to tailor capital requirements of fintech with the inherent risk characteristics of the business. Today, the focus is more on market conduct and governance rather than on prudential risks. Regulatory sandboxes are a good example to calibrate risk and understand the capital requirements. Hiring techies is another option, but all this also open up another challenge of revolving doors. It will take a while for regulators, therefore, especially those who are more classical in their approach, to adjust with the new technological thinking and then find the best fit.
This is all for supervisors to be concerned about, the nature and pace of developments, and to determine which developments to support and to what extent. It puts huge responsibility on the supervisors and also put the repute and credibility of supervisors at stake. So supervisor needs to be specifically very careful while supporting innovation. Having said that, it is extremely important to support innovation and technological developments because insurance technology is the future of insurance.
The biggest challenge is the informality and several regulatory concerns attributed to it. Consumer protection is one of the main concerns of the regulator. But I know it is not easy, and also it takes a long time to formalize this sector. Although some of the products developed through these emerging technologies get very popular among the poor. Therefore, I think the regulator must be flexible and take suitable measures to facilitate innovation if we are to achieve inclusive insurance.